morning, traders! Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to start the week with some of our wave counts. Don't forget that you can access on EURJPY.com to the membership. Then, after clicking on the membership tab, you're gonna find all the details about the plans that we offer on a monthly basis. To get our live market analysis every day in these markets. So you can pick the Forex, the stocks, or the full access plan, and you will get immediate access to the platform. All right, traders, let's start today with the euro that has been moving down. Let me show you what I have been doing, what I have been working on the euro. I made a first entry on the euro right here last week when we got this first rejection of the lows. This is an accumulation we were seeing before the institutions going long here, and the price moves down to this area and they strongly accumulate again. The institutions can't jump into a trade with the whole position that they are looking to put into the market. They need to do it slowly. They need to buy some portion of the trade, wait. When they have a good opportunity, they go long again, and that's accumulation process. If you want to learn more about Elliott Wave and accumulation process, you can sign up in the membership. Today we did a fantastic example on the daily video that is in the members area. It's recorded. You can watch it there to understand better how to understand these type of accumulations and how to find out if the accumulation is likely to break it to the upside or to the downside. All right, so I went long there. I booked partial profits. Once the price moved 1-to-1, I usually risk 30 to 40 points. In this case was 36 points, my stop loss. So I booked some partial profits on half of my trade. Then the market moves down. This was now on Friday, and we have another accumulation here. I didn't trigger this one because it was on a Friday. And now today, when we are now in the live market, we can see that the market move up in a three-wave sequence, telling that this accumulation is not over yet. When we are seeing the price moving down and you are finding where is done the leg down, you are looking for a 5-wave sequence. And when you see the 5-wave sequence on the left, then you look for the 3-wave sequence, and you can trigger here as well. Or you can go aggressive if you went long here, as we are going to do it here. I'm going to explain it in a second. Then we have enough room to find out if it's an impulse or not, right? Like in this case. All right, so the way to trigger the trade is to look for another low under the previous low, and from there, once it rejects, I'm going long. So imagine doing a copy and paste of this pattern. Could be similar to this one right here, or similar to this one. This one works as well. So we can have some candles under the support line, or we can have a rejection with a tail. But it's important to see demand coming into the market. That will be the job of this green candle, showing demand, and that's where we can trigger. Of course, I'm gonna guide you during the entire process every day in the membership to teach you how to identify these setups and how to know with a high probability where are those turning points. So that's the plan. That's gonna be the entry. And if this time we have a 5-wave sequence, if we have 1, 2, 3, 4, 5, then ABC. So this is 1 and this is 2, and then we have our ABC. That's going to be the entry point, and that's where we can have a fantastic setup to the upside. All right, so this looks pretty good. Let's have a look at the Euroyen. The Euroyen, this trade already happened, but I want to share it with you because it was a fantastic entry. So let me show you what we did last week. This one is more educational than a forecast. Then we go to the S&P to forecast what is happening, and I have an entry point soon. So here we're going to have it. All right. So look, here we have. Oops. There we go. Here we have the Euroyen. It was on April the 5th, and we got the entry at 134.73. The protective stop loss at the 134.27, and the take profit of 137.40 area, right? So let's go through that trade. Let me explain the reasons and why I went long there. So my entry was right here at the close of this green candle. That was my entry. So let me tell you first what I did with the trade, and then I will show you why I triggered the trade. So first of all, when the market moved up here, it was enough to have a 1-to-1 risk-reward ratio. So I take out half of my trade out, and then I let run the other half. The price did all this accumulation process, which is fine, you know, it's part of the process. And once it completed, once the institutions completed the setup, it started the big wave 3, and we were able to capture this whole wave 3. My target 137.40, some points below the wave 3. However, today I moved my protective stop loss to the 60 area when the price was here, because I said, that is more than enough. So I finished with 187 pips of profit on my trade here. So if you want to learn how to find out these beautiful setups, you can sign up to the membership, and I will show you every day how we can capture these beautiful swings. Let's work now on the S&P. I think that the S&P is gonna provide a fantastic entry this week or the upcoming week. All right, so let's talk about the level where I'm looking to find the completion of this corrective wave 2 on the S&P. Look, I'm looking into this area. So we are talking on the S&P or the ES around the 421, between the 21, the 19 area to the 388. That's going to be my area where I'm looking to find the reversal. The S&P is pretty bearish today, and we're starting the earnings season. So eventually I'm looking to see some buyers, the price moving inside this area, and once it rejects, could be on the hourly chart, I want to go long. All right, but first of all, look what I'm saying and what I'm looking for. First of all, I need to see some buyers. Right here. That's going to be the meaning of my B. I need to see some buying. Then another move down inside this area. Then the reversal. And that's where I'm going long. I already bought SPYs here, in this area here. We were talking about the end of this wave 2, and we were able to capture the move up. I'm still in the trade, and here I'm going to add to the position. So let's have a look at the hourly chart, because this is a great example, especially if you are learning the Elliott wave theory in terms of application, because the real world is going to be different to the books. So look, here on the S&P, you may be asking, okay, but what if this was the end? Right? That could be the end of wave 2. And actually, I was thinking that. So look, the price makes the double bottom. And I was thinking that, okay, that's it. So if we're going long, we have to do it here. So we have an edge, we have an advantage, because we have all this distance to do something. Once we figure out that the pattern finishes a 3-wave sequence, similar to the euro-dollar, right? We know that, something is not right. So if we went long here at the lows, always we need to go long at the lows when we have a validation. We can say, okay, I'm going to book some profits. I'm going to be more careful. The price moves down. Not good. So I should close my trade, right? And the price bounces and look, fails to make a hard high. And from there, we have some strong sellers. That's not good. When you are looking for a corrective wave, it should look like 1, A, B, C. But if you are seeing the same corrective wave and you have A, B, and C, accelerating, gaining momentum, You're not going to try to buy this monster. Makes sense? Today in the daily video I was telling, all right, there is something important. If you're going to trade against the trend, we are always trading against the trend, right? Even if you are following the trend. Let's say that you want to short here. You are going against this little trend. So actually, even if we are trend traders, we are also always trading against the trend, right? But that trend that we want to trade against should be weak, like this one. You don't want to buy after this monster. If you have this huge movement down, you don't want to go long. Make sense? You need to trade against the trend that is weak, right? So this one is a great example. Now, let me ask you, is this a weak leg down? Of course not. Is this a weak leg down? Of course not. So we need to see the price slowing down, making B, and then moving down, but at a slower pace than this leg down here. And that's where you can apply oscillators, stochastics, if you like, MACD, RSI, whatever, because you're looking for divergence here, or just visually with price action, you can see it. Right? And when you have that divergence and you have that rejection and you have a whole narrative, that's where you can go long and make a lot of money, because this thing is a matter of patience. Here you are not trying to trade and trade and trade. You are going to look for the highest probability trade. And if you're scalping, you're going to do the same process on lower time frames, of course. All right, traders, so that's the plan for this week. I'm going to start the week bearish on the S&P. Let's see how far it wants to go. And once wave 2 is done, we are going to start looking for the reversal. Please have a fantastic start of your week. I'll see you inside the membership on ElliotWaveStreet.com/membership. You will find all the plans that we offer. And I'll see you inside to get daily analysis, tips, tricks, and if you are learning, or if you're looking to learn the Elliott wave theory, or if you just want to see the trade setups that we have here inside, we have, trust me, a fantastic thing inside the membership. So I'll see you soon. Take care. Bye-bye.